Hey there, welcome back to my channel, it's me, the Mind Injector. In this video we're diving deep into the world of Tesla, one of the most talked about stocks on Wall Street. But hold on, before you rush in to invest, there's a critical date you need to mark on your calendar, and we'll get to that in just a moment. We'll discuss the headwinds and tailwinds facing Tesla and explore why patience might be your best ally in this stock. So let's buckle up and get started. Tesla. It's a name that's been on everyone's lips lately. But before we talk about that important date, let's take a look at the current landscape. There are plenty of convincing reasons to invest in Tesla right now, but patience is key. First things first, let's talk about something that's got a lot of investors talking: a recent price target cut. Deutsche Bank analyst Emanuel Rosner recently lowered his price target on Tesla stock from $300 to $285. What's got him concerned? Well, it's not just Tesla's recent production and delivery figures, but the potential downside risk to 2024 consensus estimates due to limited volume growth next year. Rosner's base case suggests that Tesla might guide to about 2.1 million deliveries next year, which is less than the current consensus of 2.3 million units. This could be a red flag for investors who were expecting Tesla to continue its rapid growth. But hold on. There's another side to this story. Tesla is still the undisputed heavyweight champion in the electric vehicle market. Battle Road research analyst Ben Rose upgraded Tesla stock, pointing out that Tesla is the market-leading EV manufacturer by a significant margin. Tesla's market share of US EV sales in the first half of 2023 remains well above 60%, leaving competitors in the dust. This dominance means Tesla isn't likely to cede much market share anytime soon, and that's good news for investors. Now, here's where that important date comes into play. Tesla is gearing up to report its third quarter 2023 earnings results on or around October 18. That's just around the corner. But here's the thing, it's too risky to jump into a position in Tesla stock right now. The smart move is to wait until the earnings results are out. This way, you'll have a clearer picture to base your investment decisions on. You know what they say, buy the rumors, sell the news. Tesla's third quarter vehicle deliveries were a bit of a letdown, missing analysts' expectations. The company delivered 435,059 vehicles, falling short of the estimated 462,000. However, it's essential to understand the context here. Tesla had already warned investors that there would be a sequential pullback in production due to factory upgrades, so this wasn't entirely unexpected. In fact, you could argue that this sets the stage for an even more bullish outlook. Despite the lower than expected deliveries, Tesla reaffirmed its full-year guidance to build a total of 1.8 million vehicles this year. That's significant growth over the previous year, and shows Tesla's resilience in a challenging environment. Now, let's talk about analyst predictions. They've been dropping, given the delivery data. Analysts estimate Tesla earnings at 76 cents per share for the third quarter, which is down a bit compared to earlier estimates. Full-year earnings estimates have also taken a hit. However, here's where things get interesting. Some analysts believe that Tesla is entering the next stage of growth. With a revamped Model 3 in China and the expected launch of the Cybertruck, there's potential for a strong fourth quarter. This could be a game changer for Tesla. Now, let's look at Tesla's stock performance. It's been quite a ride. Over the last 5 years, Tesla's stock has seen a staggering 1,263% growth. That's a jaw-dropping figure, especially when you compare it to the S&P 500 return of just 54% during the same period. But it's not all smooth sailing. Tesla is facing increasing competition in the EV market, leading to price wars and margin pressures. In the short term, this could be a challenge. Lower margins could mean lower profits, even with the increasing revenue. However, when you zoom out and look at the big picture, things start to make sense. Analysts predict that EVs will make up half of global new car sales by 2035. As of 2022, they represent only 14%. So, Tesla's strategy to sacrifice short-term profits for long-term market share could be a winning one. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Momo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. But Tesla isn't just a car company anymore. They are expanding into various forms of clean and renewable energy, with a focus on energy storage and generation. This segment involves selling solar panels and stationary batteries. In the second quarter, Tesla's energy segment generated $1.5 billion in sales, showing impressive growth. Over the next 5 years, energy storage could become a significant driver of Tesla's growth, diversifying its revenue streams and reducing its reliance on the automotive sector. Now, the big question: is it too late to invest in Tesla? With a forward price-to-earnings multiple of 62, Tesla stock isn't exactly a bargain, especially considering the near-term challenges it's facing. But for long-term investors, the focus should be on Tesla's incredible growth rate and its solid strategy to dominate the EV market in the coming years. Cautious buyers and an overflowing inventory might push the pedal on the necessity for deeper price reductions. While these cuts could rev up vehicle sales, they're also likely to put the squeeze on those precious profit margins. Sure, they've got their fingers in more pies than just the automotive one, but at the end of the day, it's those vehicle sales that keep the lights on. However, in this era of pinching pennies and cautious spending, it's like trying to navigate a maze with a few extra twists and turns. Tesla's stock valuation has been soaring since January, as if it's riding a rocket to the moon. This adds another layer of complexity to an already intricate puzzle. It's akin to attempting to solve a Rubik's Cube blindfolded while riding a roller coaster. In this dynamic landscape, Tesla's future moves will need to be as electric as their cars, steering through these challenges with innovation and adaptability. So, there you have it, the current state of Tesla and what the future might hold. Remember that investing is a marathon, not a sprint. Keep an eye on that October 18 earnings report, and if you're in it for the long haul, Tesla might just be a stock worth considering. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.